Smooth 98.1. Love music, love life. It's a hump of the week, Wednesday evening, 17 minutes past 5 p.m. You're listening to the Smooth Drive. Ayokunmi here, as well as.
Right.
And it's that time to get into the world of your money on personal finance. And today we're going to be talking about taking advantage of investment opportunities in Nigeria. Investment opportunities abound. You just need to know the right place to look and, of course, the right information as well. And to be a part of this very interesting conversation that we're going to be having, you can send your messages in on WhatsApp. The number is 0809 440 981 0809 440 981. We're also streaming live on YouTube at Smooth 981 FM Lagos. So just head over to YouTube, search for Smooth 981 FM Lagos, and boom, you can join us live. So joining us this evening to have this conversation is Matilda Adefalujo. She is an investment research analyst at Meristem Securities Limited. Very good evening to you, Matilda. Great to have you on Personal Finance.
Hi, thank you for having me.
All right, absolutely looking forward to this one. So let's start from here. Now, Matilda, I'm very curious to know that is it clear to say, or is it obvious enough to say that investment opportunities actually exist in Nigeria and they aren't hard to find? Or is it that people just are not paying attention to them?
Right. Okay. So, I think you partly answered my question because I was going to, start by saying that there are always investment opportunities. You just need to be willing to look. You just need to know what you're looking for, right? So, looking at the capital market, there are different opportunities. So either you want to, invest in the capital market in form of, buying of stocks, investing in treasury bills, bonds, or even we have direct investments where, you're actually setting up shop or, partnering with business. We see different business owners, whether with the government. So I think it's more of looking in the right direction and asking the right questions, if I might add. In the market right now, fixed income instruments are quite high and attractive right now. And also, when you're speaking to the stock market, we have, certain stocks that are currently doing well. So because of the fact that we have a high yield environment and there is a negative relationship between equities and bonds or equities and the fixed income market. So we are seeing some level of, bearishness in the equities market. But of course, we have sectors like the industrial goods sector and even the banking sector that is currently coming out of a period of bearishness. So it depends on what kind of investments you want to go into: portfolio investments, direct investments, just like I mentioned before. And also there are actually certain key sectors, that are undergoing certain reforms, looking at the agri sector, different directives by the federal government about, pumping some funds in the agri sector. And also the mining sector also needs investors, right? So it's all about asking the right questions and looking out for, investment, because investment opportunities always abound. You also look at the energy sector, the oil and gas sector, the power sector, different reforms coming up that definitely need investment.
Well, that's great to know that we have different ways to actually make money and looking at ways we can also put money to use by making the right investments. But still talking about the stock market, right? For someone who is a newbie and looking to getting into or approaching the stock market, where do we start when it comes to risks that we want to take?
Very important question.
Should we be low, or we shouldn't be taking risks at all? This is another question.
Okay, so I think stock market 101 would tell you that.
I like that. Stock market 101.
Stock market 101 would tell you that the stock market is very risky. In short, one thing I tell people is, see, if you do not have if you don't want to have high blood pressure, please do not enter into the stock market, right? There is the tendency of someone actually, you know, developing some levels of panic, right, in the stock market. You know, I remember when I started, I was always checking, you know, my company has an app, Meritrade, and I would just, okay, so I bought GTCO, I bought this particular stock, and I'm checking, oh, it has fallen, oh, it has risen. So yes, there is that factor, that one needs to consider. But what is important right now is that when you're building your portfolio, or when you're starting, just like you said, as a newbie in the market, you have to think about different things. So it's not just about, oh, someone asked me to, or okay, I think I'm going to be making wise investment decisions by investing in the stock market. You have to actually sit down, go to the drawing board, ask specific questions. What are your goals and why are you investing, right? So a lot of people actually focus so much on the company that they want to buy that they don't even think about building the portfolio. How does it fit your goals? So just also ensure that whatever it is that you're buying fits your priority or your goal, like in a few years from now, right? And also, once you figure out what your goals are, you now then itemize companies that fit your needs. So if you're looking to buy and hold for a long period of time, I think the mindset that you have is usually very different from, oh, let's assume that you're in the market for, you know, short-term investment opportunities, or you're even there to trade, right? So there are actually different moving parts that go into investing in the stock market. And if you're not careful, if you don't set goals for yourself, you get lost and you make mistakes, right? With mistakes, I guess you'll be fine at the end of the day, but you have to also
learn
be
from
sure
your
that
mistakes, right?
exactly, you learn from your mistakes, but you have to also ensure that you're not going to be making costly mistakes. And you know how they say that with higher risk comes higher returns? Yes, that is actually also true, right? You have to be willing to, you know, launch deep into the sea. But another thing that is important to consider is your time horizon. So let's assume you're starting your investment journey as a 50-year-old. I mean, a 50-year-old, a 60-year-old is closer to the end than say someone that is 22, 25. Now, as a 25-year-old, you have a larger bandwidth to take risks, right? So as if your time horizon is shorter than, or let's even look at the age factor now. It means that you're looking at companies that are not so volatile. You know, we have different stocks rather on the exchange that, you know, are very volatile, prices going up and down, and those are the hypertension stocks that I mentioned. You have to ensure that, you know, you're entering the stock market with your eyes wide open and knowing that, okay, yes, I'm doing this to myself, and this is what, you know, I am liable to encounter. So, I mean, maybe I need to put out the disclaimer again that in the stock market, the stock market is very, 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 very risky, and you know, you just have to be intelligent, right? There are certain things, and I would say maybe even resources that, you know, we sometimes, or at least I try to advise people to read. You can check The Intelligent Investor. I think there's also another one, The Warren Buffett Way. You know, these materials, you know, try to help you break down different principles that can help you as maybe a newbie or even someone that is even in the market, right? I know I'm still reading The Intelligent Investor. I'm not done, right? And I think another thing that's also important is that you are, just like I said, you're entering into the market with your eyes wide open. You're aware enough such that you're not just jumping on every event, on every news, on every bandwagon, on every vibes. You know how they say that the stock market is driven by technicals, fundamentals, and also sentiment. So there's also the sentiment part, which I believe that drives the stock market by stock market a lot, right? So
Okay.
sometimes someone, some investors could just decide that, oh, something has happened and we are selling off, or something has happened and then there is just a particular interest or renewed interest on specific stocks. So as a newbie or even someone that is currently in the market, you have to ensure that you're not just jumping on every bandwagon, and set your objectives, ensure that you are trying as much as you can to stick to them.
Right. I mean, looking at all that, I mean, you've emphasized the importance of anyone getting into the stock market to educate themselves, get the right information, and so on and so forth. But I mean, there's probably a limit to how much one can actually learn up to a particular point compared to
That's right.
let's say experts like you. Now, for an individual jumping into the stock market and doesn't want any case of high blood pressure and needs to be on meds and so on and so forth. I mean, how much of it is so how key is it for that person to say, you know what, I can't deal with this. I can't be looking at my app every single minute of the day. Let me delegate all this to experts like Matilda, for example. Is that a reasonable way to go? Or does one say, what, I don't need the experts, Jerry. I'll read, I'll do this one, I'll go ahead myself. What do you think about that?
Okay, I mean, I think it's down to choice, to be honest. There are individuals that believe that, oh, they are knowledgeable enough and they can make certain decisions. There are actually investors that only reach out when there is problem or there are problems. But I believe that it is very, very important to have experts. I mean, the reason I am alive right now, the reason I'm able to live and the reason I'm able to eat every day is because I have investors that reach out for financial advice, right? And this is what I do.
Right.
So some of the advantages that I believe that an investor, whoever it is that needs financial advice, would get from outsourcing, financial advice to experts is experts are actually trained to do this, right? They are dedicated to doing this. That is all they eat, breathe, live by, live for. Right? So it helps you, it gives you access to like a team of experienced professionals that have expertise in conducting market research. I mean, my designation is investment research analyst. So what we do is research on different companies, what is going on with this particular company, why is their maybe their share price rising as much as it is, or right issues in the market, what's driving it, what do we think would happen, what do we think the fair price, do you understand, like all of these different things. And also by outsourcing your financial advice or help with the stock market, you have access to experts that are actually reliable and unbiased. Because let's assume that maybe I bought GTCO, I don't know why I'm mentioning GTCO, but let's assume I bought GTCO at say 20 naira, and it's now it has risen and has now fallen. Now, if something negative happens to GTCO, maybe because I have affiliations with maybe the MD or someone, there's this sentiment that will be attached to it, and I would not want to make the right decisions as I am supposed to. Right. So and also this, analysts or experts would carry out the kind of research that I don't think an individual has the time to do, right? Who has the time to carry Excel?
Because it's their job to do that.
Yeah, well, do you understand? So this it's actually much more cost effective and also time effective too. So I believe that it is wise as an intelligent investor to outsource financial advice to experts, because that is what they do. That is what we know how to do.
Fantastic. And that is why we have an expert on the show this evening to give us all this and pull our ears and give us the right information and the right advice as well. There's more of that information to come on the other side of this quick breather right here on Personal Finance on the Smooth Drive on Smooth 98.1. Stay with us. Okay, halftime. Matilda, quick one.
Yes.
it'll be safer if you don't use specific companies as an example. So,
Yeah, I figured.
instead of GT codes, you can say, oh, if I bought a banking a bank a particular
Bank
bank,
and stock.
yeah, just like keep a blanket
Yeah, that's fine.
so that people don't begin to acquire GT code. What happened there?
Yeah, that's true.
That sort of thing. So cool. Criminals. I bought one king size shower from them.
Tiny.
I was disappointed. Like when I got the nylon from the delivery guy,
You were wondering what that is.
it's light too. And it's king size. No. No. Anyway, Shai, these days I'd rather buy. Have you had city
How
subs?
much do we have?
Giving the ad or how much time left of the show?
For the show.
About 15 minutes. 5:45 is our cutoff time.
15 minutes.
Yeah.
Okay.
So we're done at 5:45.
Mm-hmm.
Have you had any soap? We've had some from there now. Have a foot long. Now it's twice you'll have it. Twice. It's heavy. Trust me. This is Personal Finance on the Smooth Drive on Spirit 98.1. Love music, love life. It's a hump of the week, Wednesday evening, 34 minutes past 5 p.m. Ayokunmi Joy Urea also in the studio, as well as our very special guest in the person of Matilda Adefalujo. She is an investment research analyst at Meristem Securities Limited, and we're talking about taking advantage of investment opportunities in Nigeria. And it has been an information-filled show. You need to jump on this one. If you're just tuning in, welcome. You have made it just in time. You can send your questions in, any comments you might have, any experiences you've had when it comes to investing, the stock market, and so on and so forth. You can do that by sending messages to WhatsApp on 0809 440 981. 0809 440 981. You can also join the live stream on YouTube at Smooth 981 FM Lagos. And yeah, drop your comments there as well as we go along. Okay, Matilda, let's get back into the conversation and let's talk about fixed income. Fixed income. Do opportunities for bonds exist in Nigeria? I'm sure the answer is yes, but how much of an opportunity is there?
Okay, so I was going to say a quick and easy yes, but then I mean, the market actually trades on expectations. Currently, we are in a high yield environment. Inflation is high. The monetary policy authorities are hiking rates, which is, positive for yield in the fixed income market where we have our bonds and treasury bills, right? So right now, opportunities abound in the fixed income market. We have rates on fixed income, on bonds and even treasury bills rising as high as 21%, 22%. That's on the longer end of the curve, which is very attractive if you ask me at this point in time. And also for bonds, you have access to coupons which are paid semi-annually, and of course they are risk-free because they are government bonds, right? They are government instruments. But then when you look at our expectation of the yield environment of even our macros environment, so there are indications that inflation will moderate towards the end of the year. And when this happens, there's a likelihood that the monetary policy authorities will now have to cut rates. But then the good thing for investors is that they can actually lock in their positions now. That is, they can take advantage of the currently attractive or high yielding fixed income markets, right? So yes, opportunities abound in the bonds market, but it depends on when you're doing it. If you're taking positions now, yes, please. But if you're holding on till and you're expecting that maybe rates could continue to trend upward, maybe not, right? Because I mean, general advice is just to lock in your positions now in expectation of when yields will start to drop.
All right. So if we have to wait that long, right? Does that mean that getting into the money market is the right way to go? And talking about money market, I'm talking about treasury bills. Are they exciting for anyone who wants to invest in it? Is it something we want to be looking into?
Yeah, so just like I said earlier, the fixed income space generally is actually very, very, very attractive. So you're looking at your bonds, you're looking at your treasury bills, you know, even some mutual funds. So when you look at the yield curve currently, we have an inverted one that is so speak plain English. I'm so sorry. So speaking plain English, what's what I'm referring to?
Okay.
Okay, so when an inverted curve suggests that yields on the shorter end of the curve. Okay, so your yield curve shows you the relationship between yields and time, or the maturity. So you have, say, between 1 year and 30 year. A normal yield curve should have the 30-year yielding more than the 1 year because of the time that you'll be locking your funds in for, and also factoring risks. But what we have now is that on the shorter end of the curve, you have your 1 year, 2 year, 3, lesser than 5. It's yielding more than the 30-year. I mean, the longer end of the curve, regardless of the respective maturity, right? So just like you said, I think it is more yielding or more beneficial for investors to lock in their funds on the shorter end of the curve, buy your T-bills, even your bonds too. Just ensure that you're locking your funds now, because anything can happen, right? We are all praying for inflation to trend downward, and once that happens, we're going to see rate cuts, and which is not all that positive for the fixed income market. So now the best time to buy or to invest was yesterday, but the next best time is now.
Best time was yesterday. The next best time right now, man. That's Matilda Adefalujo 2024. You heard it here, right here on Personal Finance. Okay, now let's talk about the US dollar, because a lot has actually been said about it. Now, does it contain any opportunities to invest, perhaps?
Well, yes, I'll say yes. I mean, we've seen how it has trended. I think this year alone, it has the dollar has. The naira has weakened against the dollar by about 80%, right? So the general rule of thumb is, for investors to invest in different dollar mutual funds. So, speak to different experts, different advisors on whatever. Because it gives you room. You have access to, yield on it, and then there's also capital appreciation as the exchange moves. So yes.
Okay. All right. That's actually a good one to go. But now, talking about something that a lot of us are always thinking about, and that's the US dollar, right? Does it contain any opportunities for one who is trying to get into that space?
Can you take that again, please?
Okay, so I was talking about the US dollar, right? But I'm also looking at how one can also get a balanced portfolio at the end of the day. Looking at, okay, I want to invest. There's the dollar, market to look into. There are other, there's the money market, that's treasury bills. There's the fixed income and all that we've actually spoken about. So, how does one get a balanced portfolio?
Yeah. So, wow. Okay. A balanced portfolio is one that actually takes into consideration time horizon, because if you're looking at, say, Matilda's portfolio, there's the room to duplicate or to copy, or even get insights from someone else's portfolio. But then you have to also what's the word now, customize it or personalize it. So what is my time horizon? And also consider your risk appetite, right? You have to ensure that given the length of time that I'm willing to stay in the market for, what's my risk appetite like? Do I want to take on more stocks than bonds? Okay, so just like I had mentioned earlier at the beginning of the show, the stock markets and the fixed income markets are like on two different what's the
platforms,
word now? Like
more
on
or
two
less.
different ends. Yes. So one is like extremely risky and one is extremely safe. So now it then depends on you. What age are you constructing your portfolio? What's your risk appetite like, and by how much do you want to diversify? So it is always advised to diversify. So while you're looking out for stocks, do not put all your eggs in one basket, literally. So you're looking at your portfolio as your basket. You're looking at your portfolio as your basket now. So yeah, I mean, different advisors actually recommend a 60-40 rule portfolio, where you're allocating about maybe 60% of your portfolio to stocks and 40% to fixed income. But again, I would say that it depends on your age, and also your risk appetite, right? So, and also ensure that whatever portfolio, so we always have portfolio rebalancing like from time to time. So based on maybe current realities, by how much, maybe a particular stock price has moved from when you came into the market, or even what's going on in the bond space, the fixed income space. So there's room to rebalance. So there is no one size fits all.
One size fits all.
Right, there's no one size fits all, but just ensure that it is attuned to your lifestyle, your time horizon, and even the information that is available to you.
All right.
Very, very important. Not a one size fits all. You need to take things depending on your peculiar situation. Don't look at somebody else's portfolio and say, oh, that looks really good, I should do that. Do what works absolutely best for you. And on that note, we pull the curtain on the show this evening, Personal Finance. Thank you so much to you, Matilda Adefalujo, for joining us. She is an investment research analyst at Meristem Securities Limited. Hopefully we'll have you again sometime in the future to give us more education on investment opportunities that abound. And on that note, thank you all for being a part of Personal Finance every Wednesday, 5:15 p.m. on the Smooth Drive on Smooth 98.1. That is exactly what we do. The Smooth Drive will continue. There's more great music coming up for you as we journey along to the 6 o'clock hour.